John Belton, Portfolio Manager, Managing Director for Growth Portfolios at Gabelli Funds, is here. Thank you for being here. Some of your thoughts on the market action. I think some folks, traders are a lot more accustomed to the volatility. Regular folks are looking at their, 401ks and getting a little nervous, perhaps, and maybe you're getting some calls with people asking, oh my goodness, what's going on? What do you tell them?
Definitely am getting a lot of calls, Nicole. Thanks for having me. I like to take a long-term view, kind of typically like to invest in ideas with at least kind of a 1 to 3 year time horizon. Coming into the year, we're coming off back-to-back mid-20s type returns in the S&P 500. So it's a very elevated starting point. Specifically in the fourth quarter last year, we sort of exited the year with some real animal spirits, I'd say both in the real economy and in the stock market. And so I think pullbacks like this, they really can be healthy. You had Treasury Secretary Scott Bessent saying a similar narrative yesterday on Meet the Press. But pullbacks like this can be healthy. I think a lot of the names that we invest in, some of the core, specifically mega cap tech type names, trading more at attractive valuations here. So I'm really not that perturbed. I would say that the backdrop is still very uncertain. We still don't know a lot about policies. I think there's a lot of macro uncertainty. The recession versus non-recession debate has come back to the forefront. So I think it's going to be a slog near term, but I still think U.S. stocks is a good place to be over kind of the medium and long term.
When you say valuations are nearing buy levels, what are you looking for? I mean, there's no doubt a lot of folks felt after 20% plus years that maybe some stocks were a little expensive, though fundamentally that they're still good earnings and good balance sheets, et cetera. This is what I'm hearing from some of the folks that come on. So when you say, you're just looking now for buying points, where is that and what do you look for?
Well, it's a very complicated answer. I think it's a nuanced answer. It's sort of case by case, stock by stock, but just sticking with kind of these mega cap tech names, which get a lot of kind of the coverage, a lot of the discussion, a lot of mind share. I mean, actually, I would argue most of those names saw headline valuations derate last year. The stock performance last year was fully supported by earnings growth and then some. So I actually think the big appreciation in those stocks in 2024 was driven by fundamentals. It was not driven by valuation expansion. Coming into this year, I mean, there's a lot of different ways to cut it. Again, it sort of depends on each stock, but as a group, this mega cap tech group is trading at the tightest premium to the S&P 500 in several years. Most of these stocks are trading below historical average levels. I think that's sort of one way to cut it. And then in a vacuum, it sort of comes down to what's the fundamental outlook for these companies? How does that compare to valuation? And a lot of these names, I'm seeing double-digit growth. I'm seeing margin expansion, seeing healthy balance sheets, high revenue and earnings visibility, and valuations that are sort of slight premiums to the market in some cases, slight discounts to the market in other cases. So a lot of different ways to cut it. I would just say fundamentals to date have justified share price performance. And looking forward, so long as these estimates are achievable, which we continue to think they are, these valuations are not reason to stay away here.
So at this point now, and I know you're looking at some specific names within Mag 7, we're going to be talking a lot about Mag 7 later in the show. Do you have names that you like, specific stocks or ETFs?
Well, yeah, I can talk about a couple stocks we own. I mean, Amazon is still a core holding for us. I think that's a company that, talk about an attractive valuation. I mean, Amazon's trading somewhere in the low 20s on a 2026 GAAP earnings multiple. So that really does not feel that demanding for a company with durable double-digit top-line growth and this really nice margin expansion story, specifically at their retail business with, oh, by the way, a really compelling AI story, one of the big beneficiaries of and leaders in machine learning, AI, generative AI. They're also doing a lot when it comes to AI in unlocking efficiencies at their core retail business. So Amazon's a name where we think no matter what the sort of macroeconomic backdrop is, that's a business that should continue to compound very nicely, trading at a valuation the stock really hasn't seen before, to the downside. So I think that's risk reward is very good in Amazon. I'd start there.
Yeah, that sounds good, especially with, it has Amazon Web Services, it has its retail side of it, e-commerce, etc. And what else do you like?
Well, I mean, I guess maybe taking another name that's a little bit more disliked right now in the investment community, I would defend Google here. I think this is a name. Google's trading at about 16 times next year's GAAP earnings. And I know there's structural questions about how search is going to fare, in the era of generative AI. Is AI going to disrupt search? I mean, I would just say these types of questions about existential threats to Google search seem to come up every couple of years, and Google just powers right through every time. I think what's really interesting about Google is there's a lot they can do to continue to drive efficiencies in their P&L and to take out costs and to improve margins. They have a new CFO, came from Eli Lilly. I think she seems very committed to driving cost efficiencies. And back to the valuation point, so long as Google can hit these nearer term numbers, I think that's sort of the catalyst to get this stock working again. So Google's a name that has been beaten up. It's lagged. There's questions. I think it's just too cheap for the type of quality it is.
Yeah. And what are your thoughts on how TikTok affects some of these names at all? I mean, we have the idea here that Oracle, the shares have been rising, reportedly working with the White House to move forward and oversee TikTok somehow. We're not privy to all the details, but names like Google, for example, or any of the other Mag 7, where does that fit in for you?
Well, I would say TikTok is the more direct competition for TikTok is with Meta. I think there's a little bit more overlap there between who are the users, the type of time that TikTok is competing for. It's really more overlap with Meta. A couple years ago, Meta came under a lot of pressure when TikTok usage was really inflecting. I think what Meta and Google, for that matter, have been able to really do over the last couple of years is start to play a little bit more of TikTok's game, and specifically on Google, talking about with YouTube, but use AI to drive better content recommendations, use AI to drive better user engagement. I think that's what TikTok was so successful at years ago. I think Meta and Google have really caught up to TikTok over the last 2 years on that front. Looking forward, I think TikTok as a competitor, sort of peak competition from TikTok, I think has already come and gone. I think from here, it's more likely that YouTube and Facebook and the different Facebook services are taking attention share, taking time share away from TikTok rather than vice versa.
And maybe with DeepSeek, people's AI appetite sort of, was taken away for a brief moment, but people still ask about AI. They still want to hear about AI stocks. Are you finding that? Where are we in the AI revolution?
It really is interesting how quickly the market's appetite for AI stocks has cooled. I'd say, if anything, all the recent data that we're coming across, all the recent anecdotes we're hearing, all the recent headlines we're reading suggests that in the field, the appetite to invest in AI is only increasing. You've got something like xAI, Elon Musk's company, launching Grok 3 last month. That's a company that spun up just a year ago, and the quality of the model that they've built in just a year is incredible. You've got a lot more demand for AI infrastructure coming from sovereign governments in Europe, as another example. You've got things like Stargate. I think we're still at the tip of the iceberg for AI as an industry, and I think we're really still in a big, bull cycle for AI infrastructure investment. So, again, I think market sentiment is going to come and go on AI. I think it's going to be choppy trading, but this is a long-term winning theme, and identifying the winners is going to be a good way to make money in the stock market for a long time.
All right, and last just thought, big picture. Look, you don't know exactly where the market will be on December 31st type of thing, but are you comfortable with the market projections that are over 6,000? Many folks are coming in with S&P 6,400, 6,200, et cetera. Do those sound okay to you, and do you have a target for year end?
You know what, I really don't do price targets for a specific point in time. What I'd rather talk about is, the market is expecting S&P 500 EPS to grow about 12% this year. That's on top of something like 9% last year. So the market's baking in accelerating earnings growth in the S&P 500 this year, despite a decelerating GDP growth environment. Back to your question, I think if U.S. companies can deliver 12% earnings growth this year, the S&P 500 earnings grow 12%, regardless of what price that exactly translates to on December 31st. I think this stocks are a buy here. I think headline valuations for this type of growth, still a buy. It's just about delivering on the earnings expectation. So I'm much more focused on, analyzing companies, seeing if they can hit the earnings expectations. If they can hit something like 12% earnings growth this year, stocks are going to be a fine place to be.
John Belton, Portfolio Manager, Managing Director, Growth Portfolios at Gabelli Funds. Thank you. Good to see you.
Thanks,
appreciate
Nicole.
it. And I'm glad you quantified it like that. That was interesting. It was a good answer right there.